In today's video, we are doing a comprehensive analysis discussing absolutely everything you need to know moving into Christmas and 2025. This is a video you do not want to miss. Let's jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are doing a deep dive into the short-term and higher time frame price action for Bitcoin, discussing exactly what is happening, the key levels you should be watching, our next targets, likely next moves, and even the weekly chart. We'll also briefly be going over the altcoin market and Bitcoin dominance, as altcoins have seen a little bit of a rally moving into the open of today's candle. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in VIP, where we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to all of our group chats, our general chat, our trading chart and education chat, our daily video chat, our news, and our help chat. Of course, we have over 700 members in the VIP, and we've been running it for over 50 months, guys. You can see our entire trading track record by clicking the pinned comment in the free channel and clicking that first link, or the second link will take you on a 10-minute video tour inside the VIP. So if you're interested, contact me by clicking my name to check it out, and let's go ahead and jump on in. So as we can see, over the past 24 hours, Bitcoin has continued toward the downside, and we posted on Telegram yesterday in the channel discussing that it was looking weak. We weren't really showing too much strength at these levels, and we were expecting a continuation to come down essentially to touch the lows that we created on that prior move. And we saw that occur over a 4-hour period, a very strong move toward the downside, now followed by a retest of this prior level of support, testing this now as a resistance. Overall, the price action is following more or less what we have been expecting, and if you've been following the channel, you would know that we told you upon the breakdown of this 4-hour diagonal uptrend, this uptrend, you can see this diagonal trend line that we have been established over the last month and a half. Upon the breakdown of that level, we were expecting a continuation low. We actually mapped this out in our Telegram channel. We showed you this expected trajectory of the price action, a build up to retest that trend line, only to see a correction back down. Again, that was posted in the group chat. So we are expecting continuations lower, provided Bitcoin does not regain control. The buyers do not regain control. We're going to talk exactly what needs to happen for that to occur in the video today, and go over all scenarios, so we have all bases covered. So let's go over to the market data really quickly. The market data is showing, again, a little bit of a jump up in liquidations and volume, but nothing too crazy. Of course, Christmas Eve today, Christmas tomorrow for Australia. So we are expecting volume to kind of die down a little bit. We are seeing volume up 28% for today, though. 261 billion in volume, not massively high. Liquidations up 12%, 291 million. Pretty evenly split between longs and shorts, 151 million coming from longs, 139 million coming from shorts, as volatility does start to pick up as we break through these horizontal levels of support. Looking at that weekly candle, we have a lot to discuss here. We'll come back to that in the video today. Moving over to the DXY. Not too much happening here, more or less as expected. While we do remain above this upper level of resistance, this is now an area of support, we are expecting continuations upwards, potentially to fill this gap over here at around 110. If we do want to see the DXY crumble, we need to see these lows taken out. So there's a low we've established at around 105, needs to be destroyed. If we break below this level, we then expect continuations back towards that midline, but until then, expecting continuations higher. It is likely likely the DXY will slightly chop upwards into the next interest rate decision, or at least when there is information regarding the probabilities of the next interest rate decision being a drop. If they drop the interest rates, the DXY will likely come back down, as it is mainly pushed back up in regards to the speculation surrounding future interest rate decisions, more so in regards to the probabilities being lower for, you know, significant amount of interest rate reductions moving into 2025. That has kind of been tapered a little bit. They're only expecting 2 now, which has kind of driven a bit of uncertainty and fear into the risk asset market, and again pushing the DXY up as a consequence. Moving over to the S&P 500, we can see here on the S&P 500, the weekly has been able to establish a bit of a rejection really from this prior high, and we've been able to push back up quite aggressively, showing there is still a lot of demand at these levels for the S&P 500. A pretty large downward wick over here, retesting that mid 580 level, now retesting 6,000 as a level of resistance. This weekly close is going to be very pivotal. If we are able to break back above the weekly open price of that prior candle, that will give us the confirmation we need to see to be confident that the selling pressure from that candle has been absorbed, and we are then expecting a continuation higher. Now again, provided we sustain above this 5,700 level, again this is a high point, our retest and continuation to 6k, provided this level of support is able to hold, no matter really what happens over here, we are expecting continuations upwards on the macro, so we could see a week or two of drawdown before a continuation, or we could just fully engulf this opening price and continue upwards. But no matter what really happens, we are expecting macro continuations above this level. Only if we drop below this level do we really have a confirmation that we are going lower on the macro scale. So until then, macro bullish, but short-term bearish and cautiously optimistic on this current weekly candle, particularly with Christmas around the corner. So before we get into the rest of the analysis for Bitcoin, go ahead and join BitGet, BitUnix, or BingX. Sign up to just one of those exchanges. If you're looking for new exchanges, those are the places to trade on. Those are where I trade personally, and you'll get a lifetime trading fee discount of 15% off all your trading fees, which can build up to a massive 45% discount based on your trading volume. You'll support me making the content, you'll support the channel, and most importantly, you'll support yourself in your trading journey. Sign up. Don't leave it another second, it'll only take a few moments, and let's jump back into it. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump in. I want to start on the weekly chart really quickly, then go over to the short term, then jump into Bitcoin dominance and altcoins. So we posted on Telegram yesterday that the weekly candle was pretty bad, right? The prior weekly candle was a pretty large bearish engulfing candle. It engulfed not one, not two, but 3 weekly opens of our prior weekly candle. So a very aggressive week of selling pressure. And that pressure, again, all stemmed from Jerome Powell's speech, which was centered around the decrease, or should I say the increase, in a perceived systematic risk as a consequence of the interest rate decisions being more speculative, more cautious moving into 2025, which was not really what the market was anticipating. We were anticipating aggressive continuations in rate reductions, and that it kind of got flipped on its head, and that caused a lot of selling pressure in the risk asset market, pushing the DXY upwards, pushing the S&P 500 down, pushing Bitcoin down, and that is what we've seen over here in that red candle. Now, the weekly close was bearish. There is absolutely no doubt about that. We closed bearish. Now, the reason I'm showing you the weekly chart is not because I want to show you where Bitcoin is going, but I want to show you where the price action on the weekly will need to close above to potentially mark a reversal and to signify that this correction is done. And the key levels we are watching are going to be these two red lines. We are wanting to close a weekly above at least 98,000 to suggest that we have potentially formed a bottom, and then we are going to see continuations. While we remain below 98,000, the potential for further continuations on the weekly is more likely, okay? It is more likely. It's not certain, but it is significantly more likely. So we need to see the price action reclaim 98,000 on the weekly and close a weekly above to signify that we are likely moving into a reversal and this correction is done. If we go down to the daily chart, we can see we have a whole heap of support below us now. We have just retested and bounced to the dollar from the daily 50 EMA. Now, the daily 50 EMA has been a level we have established as a support and held above prior to even that horizontal, or should I say that diagonal breakout of that descending channel. We can see over here, we've been above it ever since the 10th of October, and we've remained at that level until we retested it now. So a pretty significant level of support, the 50 EMA, but we also do have, if we look to the 4-hour, a recent breakdown of the 200 moving average on the 4-hour, but most importantly as well, if we do look back at that daily, we have a whole truckload of support below, so we'll get into in the short term. You can see all these levels of support, and we even have the leading span A of the Ichimoku cloud indicator, which is lining up vertically with around that $89,000 region, which goes to bolster our argument that if we retest that $88,000 region, that is going to be a pivotal reversal point where the price action could push upwards. But if we do drop below that region, we run into a massive risk of this entire range below us opening up as price potential. Now, that doesn't mean the price action is going to drop into this low, but it opens up this range as what we would call a logical range of price movement. So at the moment, it would be illogical to expect the price action to drop to 78 or to drop to 85 or to drop to 74. But if we do drop below this lowermost area of support at 88, 89, then these lower price targets become more logical. They become more realistic. So that is obviously something we want to avoid, because if we do drop below that 89 level, we do run the risk of an extended drawdown, which may have macro consequences. Remember, as of right now, according to our high time frame, so our monthly charts, our weekly charts, the charts are in a macro uptrend. But if we start dropping below that 89 level, we push into the mid 70s, we do run the risk of seeing some macro top signals print, or at least some macro weakness, which might take 1 to 2 months of consolidation to fully absorb before we see continuations higher. So things we need to consider, and obviously things we don't really want to see from a bullish standpoint. So let's move over to the current short-term charts and discuss, where Bitcoin is going, what are the key levels, and what needs to be done for the buyers to regain control and avoid all of that downside. Because ideally, guys, we do want to see the price action go up. Ideally, we do want to see the market go up, but the reality is right now it is looking very weak, as we've been saying. And as you know, our target was 106.5 to 108. We've been out. We haven't been in Bitcoin. We've just been scalp trading, and we've been essentially bearish since we broke down from this trend line in the short term. So at the moment, guys, we are expecting the price action to potentially either go into two scenarios. Number one, we are expecting some sideways consolidation before we see drawdowns again, or we're expecting again this level of resistance here to act as a level of immediate resistance and immediately push the price back downwards. So if we're looking at the price action first and foremost from what needs to happen for the buyers to take control, the two levels we need to break above, and these levels are absolutely significant, are going to be the 99,000 level and the 102.5k level. These two levels are of absolute significance for the buyers to be in control on the higher time frame. Now, as a consequence of this, remember the weekly chart will look very good as we'll break above 98,000. But as a consequence, if we look at the trend, we have got our high, we have got a lower high, we have got a lower high. So we are in a downtrend here. There's no doubt about this. This over here is just short-term price fluctuation, short-term chop. It really is noise. It doesn't mean much, okay? We need to see the price action break one of these lower highs to show us that the buyers have stepped back in, they are regaining control, and they have the strength to push it higher. Until we do that, we are just going to continue to create new lower highs, until we meet our levels of demand, which are marked out by the gray boxes. These are horizontal levels of support marked out by prior sell-side liquidities, and every single time we drop below these levels, we will see mass liquidations of longs and open interest flushes, and new money will onboard for the next bump, and then etc, etc. And the cycle just repeats. So our most critical level we need to hold is the $89,000 region. You can see a massive VRPV gap below that, right? So we know this is a low historical resistance range. That provides information on two things. Number one, it provides information on the fact that a drop below that region will likely result in mass liquidations. We're looking at $1 billion in liquidations easily below that region, which will onboard new money to facilitate reversals. Okay, we can see mass reversals develop from that region. And number two, if we drop below this region and do not sustain above it, we could see an extended downward move develop from. So that's a critical level. And then our prior levels of support over here are just short-term reversal points, where ideally we would like to see the buyers step back in beforehand before we even see moves into that region. So on the short term, expect continuations downwards. The price action is definitely in a downtrend. The price action is definitely showing high time frame exhaustion and weakness. The macro charts are bullish, but we need to be cautiously optimistic. Of course, the short-term price action leading the direction, we need to take this at face value, and we need to be objective about it. Now, there is literally no reason for me to be sitting here blowing smoke in your face. As you know, I have been bullish ever since 16.5. In fact, you know what? Screw it. I was probably the first person to even sell the top at 64K. I was publicly bearish. That was the first time I was bearish ever since, all the way when I started my channel way back in the day, okay? I turned bullish once again after selling at 64K at 16.5K. I was buying at 16.5K publicly, and I've been macro bullish ever since. Even during this entire consolidation, I was one of the only ones who did not flip bearish. I remained bullish the entire time, saying this is a macro accumulation, a descending channel. We're looking for a parabolic move toward the upside, which we have seen. But this is now what I am saying. We are seeing short-term exhaustion. This is not a good sign. We are seeing this develop on the weekly chart. We are seeing this develop in the short term. We are in a downtrend, and there is potential for this to develop into a stronger correction, and therefore I am moving risk off. And remember, policy stipulates demand. We now have the policy or the expectation, perceived systematic risk, facilitating this downward move. We do not want to be moving against that too much. So again, cautiously optimistic. We are optimistic on the macro, but we are cautious on the short term, okay? That is how we are playing it. Take it how you want to take it. Of course, there are going to be some people who are married to their positions, who are unable to see what the charts are saying, and of course there are people who are going to just go blindly follow me anyway. But I'd always recommend, do your own research, use this as confluence, and come to your own opinions. Because if you're not developing your own sort of opinions, you're not developing as a trader. You have to develop your own understanding. You can use information as confluence, look at the charts and see what you think the price is going to do, see what you think the charts are going to do, and that helps you develop as a trader. It is not about being right or wrong. It is about making money, okay? It is not about being right or wrong. It is about making money. If you're making money and you're wrong about what you thought was going to happen, but somehow you've made a profit, doesn't matter. You made profit. That's what matters the most. Okay, so in regards to the price action, cautiously optimistic, lower levels of support, expect reversals to develop from. The most important level is 89,000 for the downside, and for the upside, we're looking at these lower high points. Until then, all of this is just chop. It is just noise. Do not get caught up into it too much. Unless you're like me and you trade the 5-minute and the 1-minute chart. Unless you're like me, don't get caught up too much. Let's move over. Altcoins has seen a bit of a push toward the upside. Of course, we have seen Bitcoin dominance drop around about 2%. Fantastic, great to see money rotate back into altcoins. Again, as we generally see when there is speculation in the market, particularly when there is uncertainty, money rotates out of altcoins, goes to Bitcoin. That was as a consequence of interest rates. Perfect. Now we are seeing that initial hysteria, that initial fear start to dissipate. It's been absorbed by the market, and now we are seeing money rotate back to altcoins from Bitcoin. So this could be the initial sign that maybe the market is finding its feet. It is starting to, absorb that news, and it is starting to develop potential reversals. So this is definitely not something to fade. This is something we have to keep in the back of our minds. Maybe this is the initiation of a reversal that may develop at some point soon. But all in all, it's a good sign to see that the market is still moving towards altcoins, even with that recent news that has caused a lot of uncertainty. So it is potentially news to signify, with Bitcoin dominance dropping, that the uncertainty is dissipated, or at least being absorbed by the market as money flows back into riskier assets, more speculative assets. Moving over to the total 3, again, we will remain bullish on the total 3, provided 840 billion holds. If we drop below 840 billion, we are bearish on altcoins. Above 840 billion, macro bullish for altcoins, meaning doesn't matter what the short-term price action does. On the macro scale, month, 2 months, 3 months, 4 months, we are expecting the total 3 to continue upwards, provided 840 billion holds. And again, for 840 billion to hold, it is pretty important that Bitcoin doesn't drop below 89,000, 86,000. Sorry, it's very important that doesn't happen. So overall, guys, that is the analysis. Thank you for tuning in. We won't have a video tomorrow, but it is Christmas. Merry Christmas to everyone who celebrates, and we'll catch you back in the day after. See you then.